And then give me a few minutes here. I'll get us on Facebook.
So you're going through Zoom? Are you going through Zoom's application to stream it?
Absolutely. Yep.
How's that work? Well,
I love it. Love it. There's no other better way, in my opinion. Because you're a tech guy, right? So you are? Or?
Suck at it, man. I like it. I like it, but I don't know what the hell I'm doing. You know?
Yeah. Well, Zoom makes it pretty easy for people like you and I.
No, I mean, I got it. We use Zoom all the time for our video conferencing for all of our workers.
It just takes a few minutes to get set up. We're pretty much probably on right now where people can hear. But I still need to do a few things to get us. Okay, and let's go at it. Hello, and welcome to Note Investing Made Easier, the podcast show. I am your host, Martin Signs, and I'm very honored that you're taking a few minutes of your time to be with us here today. Just a few announcements, and we'll get right to our guest here. For one, the July 26th and 27th workshop sold out for some miraculous reason. And so we're going to do a second workshop on August 2nd and 3rd. Why? Because we can and we will. And I feel compelled to. And that's what I have to say for the announcements. And without further ado, I want to welcome Joe Robert. And he probably has about 5 different titles and companies and everything so we don't have time for all that. I'll just say, Joe Robert, welcome to the program, sir.
Thank you. It's a pleasure to be here. As I mentioned, this is my first Facebook Live, so it'll be interesting to see how it goes.
Yeah, absolutely. So I'm honored by that, to have you, to pull you out from out of the closet, under the rock. What are we talking here?
Sometimes you get a little, I guess, focused in the day-to-day business and working over the years, where you kind of shut off social media and, you kind of lose connection with the rest of the world.
Understandable. We will get into, some of the big moves you've made in the note business, how you got started in the note business. We will get to all things notes shortly. But I do want to say that, Joe and I had a great time at Grant Cardone's 10X conference, his Growth Con in Miami, I don't know, what was that, 5 months ago, something, in January. And we got to spend the weekend together and get to know each other and have a few drinks, hang out with, what is it, Yanni?
Yeah, you know.
Oh, that guy was something else. But anyway, so I thought it best to bring you on. I know that you're still very much tied into the industry in different ways today. So let's start with, how you stumbled upon the note industry, because everyone always has an interesting story to that end.
Okay, well, I started investing in residential real estate approximately 18 years ago. First property I bought at 19. So, familiar with the real estate space and investing for quite a few years. And I think this was about early 2012, either end of 11 or early 2012. I was investing in some residential flips there in the Philadelphia area. And one of my friends, in the community, Howard Dunetz, was a private lender on that deal. And, throughout the deal, everything was going well. He was getting paid. And after I paid him back, he decided he was going to move all of his money somewhere else. and not have that capital available. And what happened was he started attending PPR's meetings there at Camaplan outside of Philadelphia for a few months. And at that time, I believe they were offering about 18% annualized return on their fund when, the good old days of the higher return. So from there, he basically was, got me introduced into, took me over to the meetings. I started attending the monthly meetings. I got educated around, exactly what was all involved in the space, and decided to, give it a try. So that puts us into about the fall of 2012. And at that time, I also had met Bill McCafferty from going to those meetings. And so I had purchased a pool of loans, probably about 10 or 12 loans. And I had, partnered with Bill to assist me in the workout of those loans. And after about a handful of those loans were worked out, we got some discounted payoffs, some repayment plans. I seen the proof in the pudding. I seen that it worked. I believed in it. And so I actually shifted my focus at that time from the real estate space over to the note investing full time over a period of a few months. So that puts us into 2013. At that time, we decided that we were going to form a partnership, Bill and I, and also another friend, Lindsay Gordon, was working with us in the note space and going to the meetings, and she wanted to be involved. So we gave her the opportunity to join us, and she had to quit her teaching job. She went to college for educational teacher and was working down in the Philadelphia city. So she quit that job, and we formed what was back then, I guess, called Note Alliance. And that was about the fall. It was probably about the summer or spring of 2013, I believe. And from there, we started Bucks Financial was the first fund we did, and we raised $1 million. And we raised that from people that we knew within the community from attending the meetings and relationships that we established over time.
So let's stop there, Joe, just for a moment here. So, there's a lot of people, they come into the note space and they kind of buy onesie twosies, on down the line and hope that, or look for it to morph into something larger for themselves. But it sounds like you saw the proof with the initial sampling, 10, 20 notes, and then you went in for it, right? Built the partnerships, raised $1 million of funds. So tell me about what your mindset is with that in terms of how you said, I need to ramp this up quickly.
Well, I guess the mindset is when you're first getting started, I would focus on getting the first few notes purchased with your own money or a partner or however you have to do that, just so you could build that track record. And during the time of doing those workouts, whether it's 6 months, 12 months, 24 months, I would be continuously attending meetings and meeting with other investors, talking about your experience, talking about how well you are doing. So this way, when you decide to go raise capital, that you already have established relationships. The note investing, is a cash intensive business or investments, and you can only go so far typically with your own cash. I would definitely look at which way you want to go to scale your business. You could keep it small and just be an investor, passive, whether you're doing it through your IRA or your own cash. But if you want to, create a business out of it, you're going to need to raise capital in order to acquire bigger pools and be profitable enough to carry the overhead to do the analysis, hire the right teammates, and so forth.
Great. And then at some point you shifted from Note Alliance to Silver Bay.
Correct. So we just wanted, after a little while, we just wanted a little bit more professional name that sounded a little bit better, something in the marketplace that, really just sounded better and looked a little sexier.
Got it. And so, hence the name, and still with the intention of raising funds, but you were raising over $1 million at that point. right?
Well, so what we had several different or LLCs set up. So we had raised $1 million through our initial offering. And then we also had our own capital internally that we had through LLCs. And then we also had other partnerships with specific investors in other LLCs.
Okay, so pretty sophisticated setup. And let me ask you, so with multiple setups, with multiple capital raises going on, and with a competent crew, Bill doing workouts, you kind of putting the structure, Lindsay, with the structure, who handled the sourcing end of it? Who created the deal flow for the companies?
That was my responsibility.
Okay.
That was my responsibility there. Most of the relationships, looking at pools, building some of the initial models there to kind of put some pricing on it was myself and another fellow, Kyle, who came in as an intern and then was an employee when we were located there in Philadelphia.
Okay. Okay, so I assume those connections still have lasted to this day because you've done a lot of transaction over the course of time.
Yeah, I mean, even between the counterparties that we bought loans from, and even Kyle that worked for us, I'm still have relationships with everybody.
Okay, and so the note industry pretty much hasn't changed from 2013, right?
Is that a trick question? I got you. I would say every industry, right? I mean, tech, real estate, note investing. I think everything has kind of shifted in, a different fashion over the last decade, right? We're kind of coming out of the, one of the biggest recessions in a long time, and I think everything has drastically changed.
Yeah. So how has the note industry changed from 2013 till today?
I would say maybe three things that stick out the most would be compliance, and regulations that have been put in over the years from, just kind of what happened with all the originations in the 2000s and the subprime lending. I think, state by state, they're putting in different laws. That's changed since, 10 years ago. The supply side, I would say when it comes to sourcing loans, I think, that's gotten, it's become a little bit harder because most of the loans that came out, let's say 10 through 15, were coming through either banks or through funds, very large billion-dollar funds that bought the loans from the banks in 2008, 2010. So we have compliance, deal flow. Those are probably the two, things that have changed the most.
So as a result of those two factors, there's been price increases.
Well, yeah, price increase would be number 3, right? Lower supply, more demand, and compliance. Is definitely has increased the pricing. It depends on how someone might say, but I would say somewhere between 3 to 5x to where they were purchased 5-7 years ago.
And so you would say that it's a wise decision to have diversification with what you're doing, and I know that you're also involved in a number of different real estate activities, and so what's your thought with diversification in general?
It depends on how much you want to scale. I think that is ultimately kind of a little bit of decision. If you're only looking to invest 50, 100, a couple $100,000, I think being as niche as possible is going to give you the highest ROI or the most profit. I think if you have to scale, millions and millions of dollars, I think you have to be able to diverse into other areas based on the opportunity and deal flow in the marketplace.
Okay. And so tell us about how you've diversified outside the note space.
So let's see, 2014. So about fall of 2014, from the Philadelphia area down to Puerto Rico. And initially when we were there, our goal was not to invest in Puerto Rico as we weren't familiar with it. And after living there for maybe about a year and a half, a deal came through a broker out in New York that was located in Puerto Rico. And at that time, finding the pools of seconds was a little bit slow. So we decided to do analysis on it, work with a local person, and we were able to take down that pool of REOs. It was a 54 property REO pool, combining of industrial, commercial, office, land, farms, chicken, a little bit of everything around the whole entire island. So we diversified, did that deal, and that was actually one of the best deals that worked out in the last 5-7 years.
Oh, wow. Okay. So I assume when something works out like that, the idea is to replicate it.
It seems like by the time you exit the deal sometimes and you realize how well it worked, to replicate it, the opportunity has gone. You know what I mean?
Yeah.
So, definitely prices, in Puerto Rico over the last 2 years have also started climbing. There's a lot of stateside money and funds coming into the space. A lot of people moving down there for the tax benefits. And so therefore it's already driven up pricings from the bottom. And the banks are less willing to now sell in bulk packages because their one-off sales are executing at a higher price.
So isn't that the name of the game, right? People that are high income wage earners or independently wealthy, they move down to Puerto Rico for the tax advantages and they end up wanting to invest in their backyard.
I think that's pretty much where a lot of people, especially in the real estate game, if you move somewhere, you just usually want to have some kind of local presence. Once you become a local down there and invest in the area, now there's tax benefits of 0% capital gain right there on the island. So if you're living there and investing long term, it makes a lot of sense.
Yeah. And do you still hold properties down there?
Gone.
Yeah, got it.
All gone at the moment, but we're always looking at other new opportunities. Like I said, we have a couple of things in the pipeline that we're looking at, but the banks have been a little shy on trying to do a bulk sale. I mean, they're willing to do one-offs, but for me, I try to keep a certain purchase price or greater now, just for time.
And what do you see, where do you see the note industry going in the next year or two?
I see it just moving along the same, pretty much the same as it looks today, right? I think there'll be, I think the note industry is always, feast or famine or whatever, where it comes out, there's a deal or two or three, and then all of a sudden you might not see anything for 6 or 12 months. I don't see too much changing there I don't see too much changing until there's some kind of economic change.
Well, it's interesting because there's a lot less inventory on low levels. So you remember, obviously running Silver Bay, Bucks Financial. I mean, you could sell off onesie twosies all day long or pick up onesie twosies all day long. Now, I mean, you really have to play higher levels to see any real deal flow. So that perhaps won't change anytime soon until a market correction or something.
Correct. And I mean, I think what we've seen over the last year or two with some of the bigger brokers is that maybe the $1 billion funds are now lowering their levels of entry just so they could acquire product also in the marketplace because there's a lack of supply of deal flow there. So they're bringing their minimum criteria maybe from 50 million down to $10-20 million spend. So now you have those guys that have a lower cost of capital or require a lower yield or whatever come down and bid out the other people.
Do you care to share a story that you and I have talked about over the phone? You don't have to mention the financial institution, but you had courted them for a number of years and you felt like you had a deal in place and they kind of, I don't know if you want to share that. I mean, you don't have to share any names, of course.
I think, yeah, I know the one sticks out and it's probably happened, a few different times. I mean, it's definitely where, at the time, Lindsay or myself and Lindsay a lot of time went to the MBA conferences and always to the New York one every year. And we built our list there and relationships. And we definitely been told, a few times that they didn't have any product, but if something would come to the market in the seconds, that they would contact us and give us first rights of bid. With a consistent follow up, over a year or two, there was one that when they decide to actually come to market, maybe from the noise or the pricing that they hear, they decide to list it direct with the broker instead of letting us see the pool or have the ability to give them their number.
Got it. Got it. And so some of those didn't pull through, right?
I would say there's definitely several of them that we try to chase down for a long period of time, and then when you end up all of a sudden you see it in the market and it's with a broker. So
what's
a little discouraging.
What's the thought on that, Joe? Is the thought that I need to cast a wider net? I need more of those lending institutions because I'm going to play the numbers game, and some are going to pull through as a result of playing the numbers game? Or do you just say, do you just go the jaded route and say, hey, this is just how the game's played, and kind of turn your back from it?
I think if you look at all financial markets, they're all pretty similar. When the seller decides to sell, I guess they're looking for the best price or looking to do a certain way, or maybe they have internal controls that when they decide to sell, some of them are like, we have to have 3 bids internally for approval. And so therefore they can't just sell it directly to you.
Mm-hmm. Understood. So what else, how are you involved in the note space today? I know that you're always looking at opportunities. You're not willing to overpay for notes. So you're okay. You're comfortable just kind of sitting it out. You're working with Bill McCafferty, right, on a training piece that's going to come out this century, or?
Yeah, I love
it. Because I've already written, 4 books, and I have multiple training courses, but who's saying anything?
Hey, you know what the comment to Bill is the easiest way to sum up Bill is the tortoise wins the race. Okay, meaning, hey, he may not always be the fastest rabbit, but he slow and steady does his thing, gets it done, makes money. So.
Yeah.
We're working together. We're just taking the back end marketing aspect of that, and working with him on that. And it definitely it's close to being out shortly in the next few weeks.
Yeah.
Getting there. It's almost there.
I think the saying is you can't whip a tortoise.
And hey, he knows too, so he could be watching.
Yeah. No, I know. Yeah, he's probably on here anyway.
But if you look around at other people that come and go, it's better to be the tortoise, the one that slow and steady stays in the business, been in 10 years, consistently does it and, makes money long term. Someone that just comes in, goes real fast, then they just, make the wrong moves and they leave.
Yeah. You said, Bill, he said, he put out, I'm not going away. So he, go ahead, Joe. Is there anything you want to say to Bill?
Bill knows everybody loves him. Everybody loves him.
Yeah, of course.
And then on the other side, on the note side, I would just say, like you were saying, I sold most or all of my portion or ownership of the portfolio in December. And, I still am consistently in touch with a handful of people that I know that broker deals or so forth. And if something comes along at the right price, right opportunity, we're looking at it.
So what is it that you're seeking right now? If someone does have a few notes, they want to funnel them through your program, through your system, or capital. Do you need capital at this point?
Nothing.
Okay. Got it.
I think, really the only thing we would need at this moment is, a bank kind of direct deal, right? I mean, that's what everybody really needs, is that pool of fresh charge-offs or something.
So not like the broker that's just kind of pounding everyone and then does a sell off and then pounds them on the back end.
No, no, no. Those they even stop sending me the deals most of the time because they know I'm not going to even bid or get involved in, kind of the process that they're doing.
Yeah, because it's and it's interesting. I do talk to some note investors that they tell me they're like, oh, they have a challenge, and the challenge is that they're getting tapes on a regular basis, on a weekly basis, but yet all the tapes that they're getting, they're getting outbid, and they're not winning anything. And so my question to them was that, are these tapes coming from institutional sellers, and are those institutional sellers sending them out to 1,000 people? And the answer is yes. So I think you would agree, right? You just need to cut it and not even look at those opportunities till they get reasonable.
Yeah, I mean, I think you start to learn who are the reasonable sellers to work with, or the reasonable brokers, and where the pricing is going to lay, or who's going to bid. And I mean, pretty much right now with all the sales that go on, you could track everything, cross county records, assignments, and so forth. So you could, keep an eye on what's going on, who's buying, who's selling. And if things are a little slow, the best thing to do is just work on your processes, improving your business, building out your models, and just being patient. If you're invested for the next 5, 10, 20, 50 years, whatever, just be patient and, let the deals come to you over time.
That's really sound advice. An hour before I hopped on here with you, I had a coaching call with one of my proteges, and it was like we were going through his LinkedIn profile and all the people that he's been making connections with, all the phone calls he's been contacting people on, and he's really put together a real quality group of individuals. He's really able to source them well on LinkedIn, and he's making all the right moves. He's only been in it a few months, doesn't have any notes, and he told me today, he's like, I don't care about buying notes right now. He goes, I'm building my infrastructure. That's really what's important. Those notes will come when they need to come. And I think that's interesting because most people that come in, right, you're antsy and you just want to go transact.
So there's maybe about 2 years ago, I think it was about 2 years ago, I had a meeting with somebody that is been in the industry for a long, long time and manages a pretty sizable portfolio. And I just was like, hey, what is the deal in the space? What kind of, is it scalable? What's going on? And, his advice was, I wouldn't only focus on the seconds for scale purposes, or, being able to deploy capital all the time. So I think, we don't want the conversation to go just one direction. So it really depends how much you're looking to deploy. Is back to that conversation. If you're only 10, 15, 20, $100,000, you want to probably stay focused in just one niche. But if you're looking to deploy millions, or you're going to raise a fund for 5 or 10 million, you probably do not want to be just focused on seconds. Maybe you want to add first or whatever, and have the ability to invest in either one depending on the deal flow.
So the advice would be, if someone's setting up a fund and getting it registered and all that good business, they should consider a diversity of products within the fund and not just call out that they're junior lien players.
If they want to scale, like raise millions of dollars, I would definitely not be all seconds.
Okay. Would you venture outside real estate backed notes?
You're talking on the consumer side?
The consumer business notes.
The thing that comes to my mind, in which the problem across all these assets for people coming into the space, or even a few years of experience, is that you may not have a lot of data on recovery rates, liquidation curves, and so forth. So therefore, trying to price out certain assets without the right partnerships can be very tough to do, because you could buy consumer debt on 4 cents, but you might only, recover 2 cents, right? So even though it sounds cheap, it doesn't mean you're going to make any money. So if you're going to look at other avenues or even on the seconds themselves, I think, you need to partner up with the right servicer that can help you do that initial due diligence and analysis on it, where they can compare it to other existing pools that they've done collections on and kind of build out that model for you to see what your returns would be. I mean, you agree there that a lot of this struggle of coming into the industry, I mean, first lien, you could kind of work with the property, the value, and the loan to kind of, make your profitability models. But when it comes to maybe seconds or underwater seconds or consumer debt, you're pretty much more on a collection play, maybe not the asset play. So if you don't have what kind of money you're going to recover on the loan, it's hard to back into your purchase price.
Yeah. Because you can't anticipate that capital gains return like with a first, where you're going to flip the property. Yeah.
So in that case, if you're going to look at the consumer aspect, I definitely would look to a couple reputable servicers, debt collectors that can work side by side with you. That when you get something, they can help you model that out and see what pricing works for you.
Yeah. Do you think you can outsell your way through in this industry at this point? So you have a certain set of brokers, you have a certain set of players that do the sell-offs at the mid-level range. Do you think you can do so much research, so much sourcing that you can beat that system and create your own environment for deal flow?
Are you more or less saying, can you kind of get out of the existing network everyone's already talking to and build your own network? I think that definitely is out there. When you're talking to just seconds, though, I don't know exactly what that scale looks like, because I don't know too many people that have done it yet. I mean, occasional one or two banks you could get here or there. I think a lot of the banks look to the brokers to keep the deal professional, make sure people are in compliance, make sure a licensed servicer is going to be used with the buyer, and manage that deal on their behalf and get them multiple bids, like I said, because some internal controls might require more than one bid.
Yeah, no, that's like a Star Trek question, right? So go explore the unknown.
Look, everything, there's always a private seller out there, right? In real estate or the notes, there's always private sellers. You got to put the time and work in. I guess, like you said about the fellow that was building out his LinkedIn Rolodex there, he's doing the work, and hopefully he has a good presentation he's putting together, and just stay in touch with those people.
Yeah, and he's connecting it with key conferences and everything else. So he's looking for a snowball effect. And when I work with someone like that, and I'm talking to him, I just when you're working with someone and you're like, wow, this person's really going to make it. This person has what it takes. I'd say I definitely would give this guy credit based on what I'm seeing.
Where's he coming from? Background.
He's a Russian immigrant, and he came here to the country with nothing, and literally just his clothes that he has on, and he's worked his way without a college degree or anything. He's worked his way to a high-level executive position in an oil company. He's out of Houston, Texas. So he actually works 2 weeks on, 2 weeks off shifts in Wyoming, and outside Gillette. And he's a private money lender, so he lends to real estate, investors. And now he's cracking into the note space, and he's not rushed. I like that about some folks. They don't feel, everybody feels internal pressures, right? You need to get stuff done, but when you say, hey, like you said with Bill McCafferty, he's here for the long term. Bill will be here in 20 years, at some fish show, at some maybe a little less hair, whatever, but like this guy. But but yeah, he'll be here through the distance.
Yeah, I mean, and I think some people, they just need to, when they come in, maybe they got to get their feet wet and so forth. And I think some people need to be honest with themselves on the best path to go, whether that be buying the notes or maybe just partnering with right people that have the experience or being a passive investor in a fund. I think a lot of people are very quick to jump into buying the notes versus maybe partnering with somebody that already has the experience they could piggyback off of and or invest in a fund that has experienced managers.
Yeah, coming at it from a different angle. I think that's great. Someone that has a bunch of notes, they're not managing well because it's just not what they do. And you bring in Bill McCafferty, you bring in some other workout, person. I know Bill got mad at me. I think it was last week because he doesn't want to be called a workout guy. So
he's not, he's just helping manage, people's assets.
I know.
But yeah,
you could be the sourcing guy, Joe.
Yeah, I mean, another thing I took a note here was that I don't think is talked about. I mean, if you put a few years of experience in and you have some data on your collectability, your models, and everything that happened, there is, debt available through some New York, firms and so forth, where you could get debt on your pools of loans that you're going to acquire. So, everyone thinks it's their own capital. Everyone might think it's, just a fund they could do. But if you're a long-term investor, you need to track your collections along the way, your models that you put together every time you do an acquisition. So this way you have all that stuff to propose to a lender in the future if you want that to scale up.
So you collateralize your portfolio.
Correct. Yeah, I mean, there's some guys I spoke to will maybe do up to 80% with experience, up to 80% LTV.
Now, is that for seasoned performing paper or is that NPNs?
Whatever.
Oh, wow.
Alternative lender.
Wow. Okay. That's interesting. I know that, Howard 10 out of LA has made a practice of lending on NPN portfolios, but he's just kind of a one-person show. What you're suggesting is probably a real powerhouse, right? That could come with some capital.
Correct. I'm saying is, if you start with your own capital, you get those deals, you get that track record, then maybe you go out, you raise $1 million, $2 million, you do acquisitions, you build a bigger track record, and 3 to 5 years in with a track record, all the data and everything, there's other ways to get capital for deals that allow you to scale higher. And of course, you need product to buy too. So it's you're always chasing one or the other, right?
Yeah. I guess with product is first things first. So let me ask you this: what would you tell someone new coming into the space, other than buy Bill McCafferty's training series? Like, what would you tell them they should do? What should be like their first few moves?
Good question. I got to think back. A little. I think I would go back to partnering up with people that have the experience in some way. Maybe you could bring the capital, get somebody that's has the experience, and this way you can learn through the process. After you learn through the process, if you think it's a right fit for the character of who you are to want to actually be the asset manager of the loans you acquire, then you would go ahead with further purchases, maybe on your own. If you deem that really seeing the whole process is not your type of character to, manage those assets on a daily basis, you either maintain a partnership or decide to invest in a fund passively. I think they're all great choices. And I think, you need to know the type of person you are, the time you have available, and what you're willing to deal with operational on a day-to-day basis.
Yeah, I think that's a good point. I would just throw in, you have to know what your weaknesses are. So, that then you can outsource that, or you can partner up with someone who can offset that.
And that's what that's kind of what I was alluding to. And through that maybe partnership or whatever process, you're going to learn where, your strengths and weaknesses are. I think mentally, or the mindset to get involved, it's very easy to say, I'm going to be great at all this, jump in by 5 minutes, and you start getting going. You're like, oh shit, what the hell did I do? Right.
Yeah, 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 exactly. And partnerships have a way of the checks and balances and everything, or at least you can say, "Oh my goodness, what happened?" and have another person to console you.
Yeah. Yeah.
So that's so tell me about the biggest challenge you and Lindsay had with Silver Bay.
That's a big
What to do with all that money you collected from people that bought notes, including myself?
biggest challenge. I would say some of the biggest challenges were just doing business with reputable people in the space.
Mm.
I think that's a big challenge, and it's going to take a long time maybe to get cleaned up on the transaction piece. I think a lot of people over the last 10 years definitely got lost money on the buy side from sellers who didn't deliver. And, there's definitely been some transactions. You might lose 50 grand here, 100 grand there, a couple hundred grand there. And before you know it, a few 100,000 you lost.
You know what said? Someone said something so intriguing to me the other day. They're like, it's so easy to make money in the note business, but it's so easy to lose money in the note business too.
Yeah. So I would say that's, one thing that, and no matter what you tell people, they always decide they're going to go and do whatever they want to do anyway. But
Yeah.
they all end up learning, or they go out of business, and they unfortunately learn the hard way. But definitely reputable sellers, I think, whatever, over the next 10, 15 years, I think transactions and, maybe platforms like PaperStack or so forth come into play where people can have, agreeable counterparties, escrow, notary, all that digitized. I think, it might become safer.
Yeah. What about reputable buyers? I mean, you touched on that with Silver Bay. Did you have people that came and did the tire kicking thing?
I think that exists everywhere. In all industries, I think that exists everywhere. And I think everything always comes down to a numbers game, and there's always going to be tire kickers, people that look at deals, maybe don't fund it, don't really have the cash. And I think that's just part of doing business. And you just got to kind of keep that note in your CRM moving forward.
Who's your mentor other than Grant Cardone?
Oh, it's a good question. I like a lot of not to be like everybody else, but I like a lot of stuff Gary Vee's been saying lately.
Yeah.
I think, he's just hitting it really home on a lot more of his content, being truth to life and, just what's going on and long-term thinking. And, we're not dying today, you need to think long-term. I think that's real important. Over the
like his message, like where he touches on, you need to outwork everyone else around you. You need to, it doesn't matter if you love your job, you need to plow through it. It's about what makes money. And
I mean, he does say that with also do what makes you happy though. Right. So I think that just comes down to the character of the person again, and knowing yourself and what you want. I mean, if you want to work 5 days a week, you could do that. If you want to work 7 days a week, that's great too.
Yeah, so it's interesting because you have like a public profile like Gary Vee and Grant Cardone and some of these other guys, and they can very much be mentors.
Yeah, I agree there. And you also got to be, I don't know, I guess, smart enough or know that not everything that they say is going to fit to who you are as a character. And you're only like going to a conference or anything, you only take away what you believe you want to take away for yourself and utilize that.
Yeah. Yeah. And within the note industry, I assume Steve Lloyd has been a mentor to you in ways?
Yeah, I mean, definitely in the beginning, close to 2012, I think, being locally there in Philadelphia, Dave Van Horn helped a lot of us out. And then
And then he left you guys.
and then it seemed like as everyone he started building some, if you want to call it competitors or other people, investing in the space. He just disappeared there.
He said, I trained you guys too well.
Yeah, exactly. So, definitely in the beginning, he was a big influence on us and a lot of people, especially a lot of people that all started in the Philadelphia area.
Yeah, and in Fuquan in Jersey, I mean, he, also was with Dave Van Horn, but yeah, that whole crowd. I consider myself like kind of the second cousin of the whole thing, because
Yeah.
I'm in the clique. But
Yeah, and then Steve's been very good. He's been a partner over the years, and glad to have that relationship with him.
yeah, he talks about the three pillars his Stone Bay has, and the first pillar being the notes and what he does with lending in the note space. And Fuquan's joining us from Amsterdam, where he's at the Tony Robbins event. And I told Fuquan that I'm putting him and Steve and Carrie on my vision board because I'm joining them next year in Amsterdam. I don't know, Joe, are you coming with me?
I doubt it. I did that 2 days. I did 2 days at Grant, and that was enough for me for the year. I like 1 or 2 days and go in and get out.
Yeah. You're not looking for a whole European experience, right?
No. Yeah, it doesn't do it for me.
Well, Fuquan, I'm in. There's a Tony Robbins event in Miami in November, and Steve asked me if I was going to go to that. So I'm not sure if you'll do Miami. You just
yeah. Mentioning Steve, I think one thing there is he's built his funds to be a little bit flexible too, depending on the deal flow. And so thinking about what he does, for those people raising money for note purchases or second liens, maybe they want to be able to have in their offering that alternative to be able to do some lending on the side for real estate deals or whatever. So if they have cash that's sitting idle or waiting for deal flow, they maybe could do those 6-month bridge loans for the real estate investors.
Mm.
That's definitely, I know that, it's worked well with Steve, being invested in notes and lending and the apartments and so forth. It's allowed that flexibility. I think, that's smart.
Yeah, that's the three pillars. You thank you for finishing those off. So notes, apartments, and private lending. So therein, and his advice, is to put it all in one fund and do it well, do all three things well. And when one's slow, the other two might pick up some momentum.
Yeah, correct. And he's played that very well, the last 5, 7, 8, 9 years. And, he picked up a lot of those notes years ago when PPR was, handing out handsome returns and selling performers at a lot higher yield. And they picked up a big portfolio there. And, then along the way, he's been doing the lending and the real estate deals. And the last few years been doing the apartments and just, keeps hitting the area at the right time.
Yeah, I think, and I'm not just saying this because Fuquan's on, but I think the same with Fuquan. Just everything, you see him because he puts his life out there on social media, and you see that, he just transitions into what's working, and he goes all in with it, and he knows what he's doing, all things real estate. And if he doesn't, like with tax lien certificates, you'll see him at the tax lien certificate auction block in Jersey, and he's like, I'm figuring this thing out, man. And he does it live or whatever, and that's just great because everybody, on Facebook, everyone on social media, they're experts, right? Everyone's a genius. Everyone's a PhD. And just to be there and say, hey, look, I don't know this, fully like I need to. So I'm just going to learn it now, and you're going to all join with me and join in that. I think that's really good. Go ahead.
I think, to the expert area, I mean, no matter what field you're in, the fields are always evolving, whether it's be with technology, laws, compliance, whatever. So I don't think you could always be the expert, meaning know everything around the field. Even if you're in 20, 30 years, things keep changing and evolving. So there's always things to learn. I think it's always a point to have multiple experts because people bring, things to the table differently.
Yeah. I think in the next 20 years, everyone will be able to have a 3D version of Fuquan that's going to hang out with you in your house and, and cheer you up and give you motivational words of encouragement and all that.
You mean you'll have like a 3D printed food plan standing there in your office, right? And you start slapping or something, he's going to yell at you?
Yeah. Exactly. Yeah. Or I would opt with the Grant Cardone. I'm good with being yelled at. Be like, hey man, that's treasonous. You're treasonous to your family. You're not working. You need to be working around the clock till you get this thing right.
Yeah, I think you just got to pick the mentors, in your life that in the areas that you need to focus on the most at that time. I mean, and there's nothing wrong with, one person might work for 6 months as you kind of fix that area. And then you find another person where, you need to start working on the other area.
Yeah. Yeah. That's good. That's good words of wisdom here is, yeah, your mentors, what you need out of a mentor will change over time, and the type of mentor you'll need will change as a
Yeah,
result.
I mean, same in the notes, right? There might be, different people out there mentoring. Some people might have better skill set in one area. Some might have another area, so it's okay to have even more than one if they're focusing on certain areas and not, the same thing.
Yeah. So really where you're at is you're obviously have the training piece coming out with Bill, and I think that'll do very well because there's always need in the space. there's always need for good solid training and helping people avoid a costly learning curve, because as you know, you can make one mistake and get burnt on a 40K note, and that's it. So I mean, what's the price of putting time and some money into training? It's definitely worth it. So I'm glad you guys are doing that. And then what would you say? Are you still actively putting bids in, or are you kind of just waiting for a good ones to come to you?
Actively, I guess, actively making phone calls to people I know,
Okay.
and staying on their radar so something comes across the desk. To actively looking at stuff, keeping my eyes in Puerto Rico right now. There's still, I think, more opportunity there for the next few years, as there's still more distressed assets coming through the foreclosure pipeline. And outside of that, over the last few years, started investing in blockchain technology and the crypto space a little bit with a couple of people, and working on that also with our name. That group is Bull Flag Group. And I see how it's not very clear, but I see how all the emerging tech will come in with the real estate and the note buying together over the next 10 or 20 years. I mean, it should, at the highest level, you should be able to buy notes instantly, right? You should be able to, you send money, you should be able to get your loans through like a smart contract, and everything changes your name on public record. I mean, I think that's really far 20, 30 years out, but it'll happen.
Yeah, I think like anything else, if the counties feel they can make more money by doing it a certain way, if buyers and sellers can make more money, if everyone can make more money, then it'll change as a result.
So those are the areas of focus right now. Just trying to building, looking for deal flow, working on the early stage investments, and working on some of the media aspect.
Do you feel like you have a clear strategy in mind for how you're moving forward in 2019? Or do you feel like you're just setting the foundation with what, advancing in the areas that you're looking to grow into?
And right now, I think looking like it's not quite clear or decided on, but we're maybe looking at going into a fund route again, but more on the tech side.
Yeah.
And still working on deal flow as it comes at the right price, and just being patient in the marketplace.
And I know you want to sell to the federal government, don't you, Joe? You and I have had those conversations. So that's my past life. Well, it's still I still have some involvement in that area, but still, yeah. But yeah, no, we all come from different walks of life into the note space. It's always, and that's why I always ask everyone, how they got here, because it's not like you read a Robert Kiyosaki book and he's like, oh, go check out the note investing space, and you kind of always take twists and turns to get into note investing.
I think like with everything, take, just be patient, right? Take baby steps, take 6 to 12 months, get in, know that it's passive, it's on the side, and, just look at it 5-10 year outlook.
Yeah, no, that's great. Anything else you'd like to say to the group here, Joe?
Partner, I mean, I leave it off as what I just said, take your time, be patient, partner up with the right mentors, partner up with the right people in the industry, only buy deals from reputable sellers, or otherwise you're going to have to go to court or just have an empty wallet. And, be patient over the long haul, that, let the loans and the pricing come to you. And if it's not where it makes sense today, just keep your feet in the door and keep working it.
No, that's great. That's great sound advice. Well, thank you, Joe Robert, for joining us. And we will see everyone next time, and take care and be good, everyone.
Thank you.
Bye.